Hello everyone. Today we're covering what the top 3 investment themes were in August. A lot happened this month, not least the fall in global equity and bond markets. So Sunil, what would you say are the top 3 themes from the last month?
Well, 3 main themes. There was a bit of turbulence in markets, although I think the end result at the end of the month wasn't too bad. Quite resilient performance in the US from the stock market, and more weakness in China, both economically and in market terms. If we start with the market turbulence, I think we've had a couple of months of better risk appetite. People may be more willing to put money to work in the stock market. We had quite a weak start to the month in both equities and bonds. I think the causes were partly fundamental. So we had economic data that was hinting at some weakness, especially if you look at the manufacturing sector. So manufacturing confidence surveys were quite weak, really across the world. But they weren't really giving central banks what they needed to stop tightening interest rates, because they're more focused on what sets prices. I think also, if I'm honest, that after a strong run, I think it was becoming attractive for investors to maybe take a bit of profit ahead of their summer breaks. And I think that's some of what we were seeing too. Now, in the face of all of that, US equity market held up reasonably well. It was broadly unchanged on the month. We had better news on economic and corporate fronts. Emerging markets, Asia Pacific, were the laggards. They were down around about 4% on the month because we had continued concerns about that Chinese economy. And bond markets were quiet on the surface. Government bonds were broadly flat on the month, but again, that was a bit of a recovery in the second half after a poor start to the month.
I mean, a very turbulent month to say the least, especially when considering markets have been performing so well for most of the year, as you stated. So on to your second theme, in what way was the US resilient?
Well, I gave 2 headlines that I think drove that better performance in the second half of the month. I mean, firstly, on the economic side, the job market is quite an important watch for the central bank, the Federal Reserve. It's seen as a key driver of prices in the services sector. And it did show some signs of easing in wage gains, as well as more people coming back to the job market looking for work, which again is something that should limit labour shortages. There was also a major global central bank conference, which didn't give any signals that the participants were kind of changing their view about sustainable long-term interest rate levels. That had been a bit of a worry for the market. On the other side, I think just looking at what companies were reporting and saying for the future, they provided a pretty strong set of results in the US for Q2. So generally, if you look at the index, the S&P 500, sales growth was positive. And in particular, we had strong results from some of the most highly valued tech companies. So thinking here particularly about NVIDIA, which has been at the heart of enthusiasm for AI. I think looking outside of the US, the picture wasn't quite as encouraging.
Yes, the picture was more downbeat for other regions, particularly China, which I guess very nicely leads into your final theme.
Well, I guess you would call that a theme of China's growth falling a bit flat, really, certainly compared to expectations for a big reopening post-COVID at the start of the year. The economy is facing a property market that isn't just unstable, but I'd say outright weak, as well as the knock-on effects to consumer confidence, consumer demand. So if you look at broad activity, compared to a year ago, industrial production growth is down a bit over 3.5%, retail sales down 2.5%. But if you look at the property market itself, the sales of residential property are about half of what they were 2 years ago. And that in turn is about 25% down on a year ago. Now, to counter this, the People's Bank of China, their central bank, they have cut interest rates, but not by an amount we would see as a big one. There's also been a lot of easing of property buying rules, but I think the question is still there about, is this going to be enough to restore the consumer investor confidence that actually gets people to transact? And I'd say we're not convinced.
Yeah, it'll be interesting to see how things progress in China, especially since they're the second largest economy in the world. So to finish the episode, as tribute to my colleague Peter Smith, I'm going to end with the start of the month, which is August saw the end of 5 consecutive monthly gains for the S&P 500. However, it's not all bad news, because year to date, the S&P 500 is still up a solid 18.7% locally. So still pretty good when you zoom out. Thank you, Sunil, and thank you for those that have watched this week as always. And we'll be back next week with a topic of interest.